And in this video, we're continuing our discussion of the book, Rich Dad, Poor Dad. That's how we learn how to manage money. And this book by Robert Kiyosaki, video number 25. Join me. Hello, welcome to Take a Step to a Better You. And on this channel, I share what I know and continue to learn. If you are new, my name is Sherifa Nakalema. I'm a business owner here in Virginia, USA. I share YouTube tips, business tips, and online tips through affiliate marketing, motivation, just to ask you to take a step, make your life better. And recently I added reviewing books. And today we continue reviewing the book, Rich Dad, Poor Dad by Robert Kiyosaki. And this is video number 25. So if that sounds good, please consider subscribing and sharing these messages. And for those of you who have been here before, who've been following this, especially the books, thank you very much. And hopefully we are getting, providing some value by reading it. And also Robert is providing value by sharing the messages. And for you, I'm not going to ask, I'm just going to assume you already subscribed and you have a bell clicked on so you get notification when I have a new video. I'll share my schedule at the end of this video. We need to first get through this lesson. For those of you who are new, please, at the end, I'll share the video, the way the channel program, like the schedule, and also how you get this one to listen for free 1 month. And also, but I really like to mention this other one, the link, video to number 1 to 24, because this is video number 25. I started from the very beginning. I introduced Robert. Video, the link is in the pinned comment, also in the description, if you want to see all those videos. Okay, now, video number 25. I promise to get to lesson 3, which is mind your own business. And because I promise, I'm going to do it, but there is a lot we have to cover before you can get there, because Robert has these summaries and some questions he puts at the end of chapters. So when I went through this, I saw that it's going to be long, but because I promise I'll still start the new topic, I'll start it today. But we have to go through some other things. So, but who is Robert? Robert, I always say that for the new people. Robert is a self-made millionaire, entrepreneur, educator, investor with a mission to elevate the financial well-being of humanity, starting with one life and one person at a time. This person would be you or me. And the book is Rich Dad, Poor Dad, because he had 2 dads. Poor Dad was his real father, who was a very intelligent man, very highly educated man with a PhD, and he was a student of education. But the story is that he died broke. Then the rich dad was the dad to his friend Mike, and this one had left school at age 13, 8th grade, ended up being one of the wealthiest men in Hawaii. And that's where the lessons come from. Robert learned from him and put it in a book. Okay, where did we end? Video 24. Video 24, when you see me reading, it means that it came from the book. I put the notes here to remind you where we ended video 24. We ended it with 3 statements that Robert had put down in bold. He said, the rich buy assets. The poor only have expenses. The middle class buy liabilities they think are assets. They're just not aware that, like when you buy a home you live in, when you buy a car, you think you have an asset, but you don't. We went through all that. So this is just a reminder. Then, now, what happens at the end of every chapter? He puts like a study. He calls this a study session, and then he summarizes the previous chapter. So I feel like, and then he asks you some questions. And I think these are interesting. The questions he put for you. I can't skip them. I have to read them. And he also put some definitions. So please, please, if you have a pen somewhere you can write, pause this video, get a pen, because this is really important, especially the definitions he's going to give. So here we go. I'm going to try to move as fast as I can. He's asking you. He has 9 questions. Question number 1 for you or for me, the reader. When did your financial education begin? Was it with this book or from another source? Question number 2. How did you react when you first read Robert's definition of assets and liabilities? Number 3, this is a question for you. How did you react when he stated that a home is not an asset? Had you viewed yours as one? After, assuming you own one, after he fully laid out his argument, did he change your mind that the house is not an asset? Okay, which cash flow situation looks most like your life? But because you didn't see these images, I don't know if you got that right really clearly. There are some drawings he did here that you didn't get to see. Question number 5. Other than your home, is there something that you thought was an asset that later revealed itself to be a liability? That means you're spending money on it, like taking money out of your pocket. Number 6, would you agree with this statement? What is missing from most people's education is not how to make money, but how to manage money. Do you agree with that? And then why or why not? Number 7, the rich dad told the boy that it's not the numbers that matter in accounting, but what the numbers are telling you. What story do the numbers in your life tell? Number 8, when was the time in your life that a seemingly positive accomplishment, like a promotion, a raise, didn't lead to the balance sheet results you expected? Like you didn't get something out of value, out of the increment amount of the bonus you got. Do you have that kind of situation? Okay, number 9, how many days forward could you survive if you stopped working today? Does the number surprise or frighten you? Like, in other words, you have some cash flow coming in from assets, but you know this, I'm now speaking, this kind of question could be answered from savings. Maybe you have some savings, or you could survive. How many days forward could you go if you stopped working? Okay, and now he goes to definition of the terms he's been using. Definition number 1, the 401k. That's a USA term. It's a US retirement plan developed by the ERISA Act of 1974 when companies realized they could not provide for retirees' health care. So they created these 401k plans, and so if you're working, they deduct and they put some money away for you that you get tax-free, that you get when you are old, when you retire. So asset. What's an asset? It's something that puts money into your pocket with minimum labor. What's a balance sheet? A balance sheet is the lower part of an income statement diagram, so called because it's supposed to balance assets against liabilities. What's cash flow? Cash flow is cash coming in as income and cash going out as expenses. It is the direction of cash flow that determines whether something is income, expense, asset, or liability. Cash flow tells the story. What is financial aptitude? It means what you do with the money once you make it. How to keep people from taking it from you, how to keep it longer, and how to make that money work hard for you. I think this is so important. I'm going to repeat it. What is financial aptitude? It's what you do with the money once you make it. How you keep people from taking it from you, how to keep it longer, and how to make that money work hard for you. I wish we all knew how to do this right. It would be better off. Okay, what's the golden rule? The golden rule, he's defining it as he who has the gold makes the rules. What's income? Income is the money that is received as a result of the normal business activities of an individual or business. What is an income statement or profit and loss statement? It measures the income and expenses, money. It measures income and expenses, money in and money out. What is a liability? Liability is something that takes money out of your pocket. What is a mutual fund? I don't know that I went into mutual funds. I think I skipped it maybe, but it has it here, the definition. It had a whole paragraph about mutual funds. It's possible I didn't read it. Okay. Mutual fund is a variety of stocks, bonds, or securities grouped together, managed by a professional investment company and purchased by individual investors through shares. The shares possess no direct ownership value in the various companies. It's just a basket of companies put together. I think it's possible I skipped it because I thought it was sort of beyond what we're discussing. What is social security? Social security is a social welfare or social insurance program commonly funded through automatic payroll deductions to subsidize persons in their old age and with disabilities. Social security is a social welfare or social insurance program commonly funded through automatic payroll deduction to subsidize persons in their old age and with disabilities. This is money they take out from your paycheck as you work. It's very common. It's on in USA. Now, that's the end of chapter 2, lesson 2. We start chapter 3, lesson 3, which is mind your own business. Okay, here's a subheading after mind your own business as lesson 3. And it says the subheading, the rich focus on their asset columns while everyone else focuses on their income statements. The rich focus on their asset columns while everyone else focuses on their income statements. I guess what he means that the rich people focus more on assets they own while everyone else focuses on the money. Yeah, the money coming in. Now, he has a short story here, which is important. In fact, he tells it a lot. If you ever hear him, Robert speaking, he talks about this and he puts it here. It's important that we read it because there is a lesson. So he says, in 1974, Ray Kroc, the founder of McDonald's, was asked to speak to the MBA class at the University of Texas in Austin. A friend of mine was a student in that MBA class. After a powerful and inspiring talk, the class adjourned and the student asked Ray if he could join them at their favorite hangout. Okay. He accepted to go, talk to them, casually, where they hang out. And when they were there, he asked them, casually, what business am I in? We're talking about, you all know McDonald's. We're talking about the owner of McDonald's. Now he's talking to these students, asking them this question. What business am I in? And everyone laughed. They just laughed. Because most of the MBA students thought Ray was just fooling around. No one answered. So Ray asked again, what business do you think I'm in? And remember, we're talking about the owner of McDonald's, the common McDonald's that you know, or you heard of. It said, what business do you think I'm in? He asked again. The students laughed again. And finally, one brave soul yelled out, Ray, who in the world doesn't know that you are in the hamburger business? It's a question actually. Who in the world doesn't know that you are in the hamburger business? Ray chuckled. That means he's sort of smiling. That's what I thought you'd say. He paused and then quickly added, ladies and gentlemen, I'm not in the hamburger business. My business is real estate. I guess you have to learn a lot. I'm now speaking. Because did you ever think about that? That the McDonald's is actually a real estate business? So, he said that I think I'm going to skip a little bit because he had to explain to them why. I think I have to read it. It will not be clear. So I have to read it. As my friend tells the story, Ray spent a good amount of time explaining his viewpoint. In his business plan, the owner of McDonald's, Ray, knew that the primary business focus was to sell hamburgers franchises. But what he never lost sight of was the locations of each franchise. Do you notice that they're always on the best corners? So he knew that the land and its location were the most significant factors in the success of each franchise. Basically, the person who bought the franchise was also buying the real estate under the franchise for Ray Kroc's organization. Today, McDonald's is the largest single owner of real estate in the world, owning even more than the Catholic Church, McDonald's owns some of the most valuable intersections and street corners in America and around the globe. And that's true. I'm the one adding that. My friend considered this as one of the most important lessons in his life. Today, he owns car washes, but his business is the real estate under those car washes. So, in other words, you have to consider the location where you are putting the business because of the value of the land. So, the previous chapter presented diagrams. He's talking about the previous chapter we had finished, chapter 2. And yeah, I think I have to read it. The previous chapter presented diagrams illustrating that most people work for everyone but themselves. They work for the owners of the company, then for the government through taxes, and finally for the bank that own their mortgage. We covered that in the previous chapter. When I was young, by the way, I'm about to end it. When I was young, I was a young boy, we did not have McDonald's nearby. Yet, my rich dad was responsible for teaching Mike and me the same lesson that Ray Kroc talked about at the University of Texas. It is secret number 3 of the rich. That secret is mind your own business. Financial struggle is often directly the result of people working all their lives for someone else. Many people will simply have nothing at the end of their working days to show for their efforts. This is where I'm ending. I made it a little bit longer to make sure I started the new lesson that I promised. So we'll end here and continue in video number 26. The statement is many people will simply have nothing at the end of their working days to show for their efforts. Isn't that very sad? Hopefully we're going to learn these lessons and hopefully we're going to teach, especially young people, to do better. Please take this lesson very seriously. Take notes or find the book, get the book. But actually getting the book may not be, people have books, they don't read. Maybe these videos can help you to just take notes and apply, please. We're not just having fun here. We are learning lessons and we want to use them. So he has one note. Remember how he puts notes? He says here that fast forward 2017. You know, this book was revised. This version is 2017. So he put a note here. McDonald's, 7-Eleven, and KFC retain their spots as the 3 largest financial franchised brands. In total, in 2016, the 200 largest franchise brands grew sales by 2.2% or 12.5 billion. That's just a note to show the power of those brands, the power of those companies. Okay, that's it. And I won't add much because this was, I don't know. You know, when I record these videos, I don't know how long they will be, but I know what I want to cover. So I don't know how it's going to turn out. But for those of you who are new, I'm here every single day. Every single day, 11, I just changed it to 11 a.m. USA Eastern Time. And I'm reading books. I'm discussing books like we just did. I plan to continue, if they supported these videos, continue to another book and another book. And then on Friday, I skip And instead of books, I just go live. So please join me live. Check your local time. This is USA Eastern Time, 11 a.m. US Eastern Time. Most of the other countries like night or evening. And then on Thursdays and Sundays, I come later, 30 minutes later. And on Thursdays, I discuss YouTube tips, business tips. Then on Sundays, it's motivation. I come and just speak to you, asking you to take a step to make your life better, depending on the topic I pick. And for those of you who want to have this, I have a link below. In the pinned comment, it'll take you. Pinned comment has 2 links. One link takes you to my website, honestsoul.com, and there's a page, Amazon page. When you click on it, it has podcast and Audible. When you click on that, it will take you to where you can put your name, register, and get this book for free. Make sure you're choosing Audible Premium Plus, not Audible Plus. Audible Premium Plus, that's where I find this book, Rich Dad Poor Dad. And if you want a physical book, there's a link, a photo of this book on my website, on that page. You click on it, you can go buy free. You have to pay. The audio one is free for 1 month, 30 days. And for those of you who are new, I have a link. The link is in the pinned comment, and it takes you to all the videos I finished. I've been doing this for quite a while, and I've recorded 24 videos before this one. So you can go, just play one time. It starts one to after another. It's like a playlist. I call it Lessons from Robert Kiyosaki. And that's it. I think it's going to be a long one. I'm not sure. So please leave a comment. Like and leave a comment, please, especially if you are new here. A comment is so important to me. That's the only way I know you are here. And remember, I'm looking for 50 people continuously watching these lessons from the books. And then I'll call it a community and I'll share my password. So you don't have to buy. You just listen for everything free. Leave a comment, please, share, and give a like also. Like I always end them, take a good care of yourself. Take very good care of your families. Take a very good care of your health. Take a step to a better you. Bye-bye.